Peter McGuire from XM joins us now live from our Sydney CBD studio. What to say about that movement in oil, Peter? Quite extraordinary.
Well, good morning, James. Merry Christmas to all. And I tell you what a night. I don't think I've ever seen anything like it. I went to bed at around about 1. The market was hot, and then all of a sudden I woke at 3:30 and stayed up for a while. It is just, shot the ball out of the park. Have a look what happened to the Dow. The crude was up nearly 10% or over it at one stage, I think. And it was obviously bid up. The market was probably certainly a correction, or certainly an upward move. I don't know what happens tonight, but I'll tell you what, you don't see that many times for a Christmas sort of feel-good story.
No, it was quite extraordinary. A little bit late, I suppose, in terms of being there for Santa, but we'll take it nonetheless. I suppose the question is, can it continue? It's been a hell of a 2018. You just wonder what 2019 has in store for us.
Well, exactly, James. I mean, we've seen that. I thought 18 was a wild and woolly year, but everything seems to be heading towards more volatility in 19 and actually being ramped up. And let's run through a big global view. But when you think of China, they're down $3 trillion, their stock market, $3 trillion US in the last 11 months.
Goodness.
You've seen gold bid up. You've seen oil fall 40%, and then it puts on 10% overnight. That's all in 2 and a bit months. You've seen the Dow wash out and then have its biggest gain overnight ever, which is just extraordinary. Then you look at what's happening as far as Eurozone. Then we've also got the Brexit issues. So I think that 19, the first half, is going to be extraordinary as far as volatility, and it's just going to be a wait and see. Too hard to plan where it's going to end, but I tell you what, it's going to be wild for trading.
What about for the optimists out there? You've sort of listed an exhaustive list of uncertainties and concerns. What is there to fuel the spirits of the optimists?
Okay, let's look at US. And that's a good one to look at because it's the largest market in the world. First off, buybacks and dividends have been extraordinary. Absolutely shot, huge numbers, and as far as share buybacks, I think it was the biggest in history. Secondly, unemployment is at record lows. So you can't say that the economy is grinding to a halt. Everyone's got a job and they're actually getting wage rises. That's what's starting to flow through. Next part, of course, is you've got energy pricing very low, and that's under control, so inflation should be fairly stable. Even with GDP coming back to 2% as a headline for 19 for US, it's still a pretty good number if you can keep energy prices relatively low. So tell me where there's a misery story there. You've had 6 to 7 years of absolute bull market for the US equities that has just been extraordinary growth and huge value created, and you've got to admit that the last number of years have been unbelievable, say the last 2 to 3. So there's the feel-good story. I don't know, where do you want me to stop?
What about rates? I would have thought the Fed's going to be critical next year, right, in terms of what they're likely to deliver as far as interest rate rises are concerned. The back few months of 2018 has been all about the Fed, the volatility they've created. You get the sense there's going to be a similar sort of view to the Fed through 2019.
Okay, we had 4 rate rises this year. We had everyone on the, when they voted last week, they were all on one side of the page. They weren't on the other, so there wasn't a disconnect between some of the members of the Reserve Board and some of the other members. They were all saying that we wanted to see a rate rise. As far as 19's looking, there are analysts out there saying we're going to see 3, we're going to see 2, we're going to see 1. I've even seen some people say we're going to see one move in rate and it's going to be lower. So I think it's going to be a wait and see. I think the pedal's off the metal at the present time, quite simply because we're going to see how the first quarter goes and where volatility takes us. If the markets settle from here and it starts to push higher, then I think that the Fed possibly may look at something mid-year. But if it looks like it's going to be a washout, then I'm sure they're going to take the necessary action.
What are you going to be watching? I mean, across asset classes heading into 2019, what you think is likely to catch your eye?
Energy's got to be a #1 concern. Any market, we use 100 million barrels a day. I was at the IEA in Paris the other week, and that first time we've ever broken that, James. So the growth as far as electricity consumption, energy consumption globally is just monstrous. So that's always a barometer. We always say, have a look at copper, have a look at crude. They've had very, very, incredible washouts since the early part of October. So let's see what happens to energy prices. I think that will show and flow into global economy if we're seeing a slowing down in China, if we see a slowdown in other regions, or does the market start to take, from here, it starts to ratchet back up? So I think I'm going to keep an eye on that. I'll keep an eye on US equities, and naturally, hopefully, we get a lift here as far as Aussie and moving into Asia as well. That's the big picture. But I'm worried about Brexit, and I'm worried about France and Italy.
Yeah, it is going to be another busy year, that's for sure. Peter McGuire, great as always to have you on board. Thank you.
Thank you, James. Merry Christmas.